China's economy is in trouble, and that could have broader implications for the oil market. Crude prices hovering just around $80 a barrel as worry over the country's struggling recovery dims outlook for demand. Here with more is Yahoo Finance's Rick Newman. So, Rick, what does this mean for oil prices? Are they headed lower?
Hey, guys, I hope so. That could be the case. What's going on in China with the softening economy, the sort of collapse of the real estate market there. They've got all sorts of problems. China does not at all look like the economic superpower in the making that a lot of people have thought it was during the last 20 years. And every time I see that there are problems in the Chinese economy, what that means is China is such a big purchaser of oil that when the Chinese economy softens, that means China's oil purchases generally flatten out or even decline. That is actually happening now. And China is such a big player in the market that when their demand goes down, it's relief for everybody else who purchases oil. That is a pretty important story right now because we've seen oil prices and also gasoline prices here rising. We've got oil in the United States at around $80 a barrel. Gasoline prices are around $3.85 a gallon. I think when gasoline prices cross into $4 and there's a 4 at the beginning of that price, I think that freaks out drivers. That's a big problem for President Biden. If that were to happen, of course, the timing for him would be bad if we got $4 gas just as he's mounting his reelection campaign. So global oil markets are complex. There are a lot of factors. But when China stumbles and its economy slows down, that usually means we're going to get a break on oil and gasoline prices.
Rick, how long could that break potentially last here? We're talking about the pact. You mentioned, obviously, could be a huge break for President Biden if we do see gas prices lower. We know that's such an important issue here for voters. But when we talk about maybe the longer term effects of that, any idea what that would look like?
I mean, there's a lot going on in global energy markets. Part of it is Russia's invasion of Ukraine, which has basically reshaped global energy flows. We, of course, have the move to green energy here in the United States and elsewhere. I guess I'd break it down into three things if you're looking at, let's say, a 12-month outlook. First, China's economy is not likely to recover anytime soon. They have been through many slowdowns, and they've been able to stimulate their way out of almost all of them for the last 25 years. This one seems different. There really are underlying problems, way too much debt in the Chinese economy, and that seems like it's likely to weigh down the Chinese economy for some time, think years rather than months. So that's good for falling oil prices. You've also got OPEC and OPEC Plus, including Russia. It's part of that broader OPEC Plus. They're trying to cut back on their supplies because they want to keep prices up. We've talked a lot before about Saudi Arabia drilling a little bit less. Russia's probably removing some oil from the market. And then the third big factor, U.S. production. I mean, people think we don't drill that much oil in the United States anymore. We actually drill a ton of oil. And the United States is now the world's biggest oil producer, and it looks as if we are going to hit new record highs for oil production here in the United States. It's not shooting up, it's inching up, but what's happened here is as oil prices stay elevated, drillers look at the market and they say, okay, we can make good profits at these prices, $60, $70, $80 or even higher. So we're seeing an increase in U.S. production. So all of those things combined are hopefully favorable for fairly ample supply. We've seen tight energy supplies the last couple of years, but that could ease for all those reasons.
All right, well, we will see oil closing today just above $80 a barrel. Rick, thanks.
Bye, guys.